Hi, and welcome to the Stay Rich podcast. On this podcast, we're going to have successful entrepreneurs coming on to teach us about how they live a rich lifestyle and give tips and motivational strategies to navigate the world. And in addition to that, we're also going to be interviewing high-level, extremely killer, competent divorce attorneys who are coming onto the show to tell us their war stories, to tell us all of the things that you as a man should not be doing if you are going through a divorce today.
Hi, everybody. Welcome to the Stay Rich Show. And I am so happy to be introducing you to a good friend of mine, Jason Hartman, who is an expert in the U.S. real estate market and has his own website, www.jasonhartman.com. You can find him all over the place. He's got a wonderful podcast and all kinds of information that he wants to share with us today. Jason, welcome to the show.
Hey, Ryan, it's great to be here. And one of the things I always talk about with our real estate investors is how there are three different types of markets, both around the world and in the US. And they are linear markets, cyclical markets, and hybrid markets. And in the cyclical markets, the ones that get most of the attention, the big cities, the expensive markets, if you look at a chart of appreciation and depreciation over time, it's like a roller coaster. So what does that inform us? Well, you are a divorce expert, and one of the things we want to do, and it always gets a big laugh, but it's very true whenever I'm at a live event from stage saying this, one of the things we always want to do is time our divorces.
Okay. Tell me more about this.
Yeah, well, everybody will tell you that divorce is a huge destroyer of wealth, and there's no question about that. It is absolutely ridiculous the way the laws are written, especially against men. Men are always coming out terribly from divorce. I was talking to a guy at a conference the other day, a stranger. I just sat down next to him at one of the luncheons, and he said, I had to rebuild my life after divorce. And I said, why should you have to rebuild your life after divorce? That's ridiculous. That's so unfair. But the way the laws are written, they're very anti-male. Now, sometimes, to be fair, I've had a lot of female friends of mine get really burned in divorces too, when they had slacker husbands. But, we know the way it is most of the time. Okay, most of the time it's the man who's getting burned. But regardless, one of the reasons divorce is such a big destroyer of wealth is not necessarily because he got half or she got half and it was undeserved. That's, the common narrative, and there's a lot of truth to it. But it also forces people to liquidate assets at inopportune times. Mm-hmm. And that's what I mean by timing your divorces. I say that kind of tongue in cheek, of course. But, people usually during economic downturns tend to get in fights over money, and it puts a lot of pressure on that family and on that couple. And then they get a divorce and they're liquidating assets at the wrong time, right? You want to liquidate assets at the peak of the market, not at the bottom of the market. And so that's just a little commentary on divorce.
So that's true. I mean, when it comes to like cyclical markets, it sounds like you want to get divorced as it's at the peak, right? So when things are going great, but often that's not the case, right? Like it's usually when things are going badly, that's when divorces happen. No one wants to get divorced when everything's going wonderfully, or very few people do, of course. But
right, exactly. I mean, there's a lot of hypergamy programmed into females. So, even when things are going well, they always want it to be better, right? So it's kind of never good enough, right? And pretty much every man will agree with that. But yeah, a lot of people live in these cyclical markets. Now, we help investors buy properties nationwide. And, we've looked at worldwide markets as well. We just can't find any that are nearly as desirable as the US market. The US real estate market is very special in all the world for a whole list of reasons I'm happy to go through if we have time. But, we like to invest in these linear markets. and maybe the hybrid markets that are kind of in between the linear and the cyclical. So let me just explain that a little more.
Yeah, please.
The cyclical markets get all the attention. They're the high-priced markets, the expensive northeastern markets, South Florida, the west coast of the US. Most of the rest of the country, and most of the rest of the world for that matter, are linear markets. Meaning, if you're looking at a chart of appreciation and depreciation during, those rare bad times of real estate prices, the linear markets are just kind of boring. They just chug along and kind of do their thing, and they appreciate slowly and steadily, whereas the cyclicals go up and down like a roller coaster. And these linear markets just make a lot more sense for investment because the cash flow is better. They tend to be landlord-friendly markets rather than tenant-friendly markets
Hmm.
in terms of the regulatory environment and the customs. So if you get a bad tenant, you can get rid of them, you can get paid, you get your rent. Whereas in these cyclical markets, they tend to be liberal leaning. And if you're the landlord, you're the big bad evil landlord, and they're the poor tenant, right? Rather than just looking at the actual contract. Hey, they didn't pay the rent. They got to get out. So
So
that's
your
that's one
advice,
of
I
the other
mean, then
reasons.
is to look at those, Midwest states, almost like the ones that are not sexy, it's not
Yeah,
beachfront real estate, that sort of thing, but it
right.
gives you consistent income over time, and it gives you sort of a consistent level of appreciation over time that you can more or less rely on.
And much better cash flow because the rent to value ratios are much more favorable in these markets. So you nailed it. These are the non-sexy markets. They don't get the attention of the media too much. The Southeast, we've got a little bit in the Southwest, but just markets with lower land values, lower prices. And one of the quotes that a lot of people repeat of mine is, invest in places that make sense so you can afford to live in places that don't make any sense, right? And so you can live in the coastal market, right? You can live in
Sure.
that expensive market. You can live in New York City if you want, but own a lot of entry-level houses that you rent to other people in these linear or hybrid markets. Those tend to be the best investments.
That's fantastic advice. And I mean, I I almost liken this to the question of inflation in the US, or just in any country for that matter. And I think that inflation is such a it's a weird thing to look at on a broad scale, and similarly like a return on investment for real estate. To ask that question on a really broad scale is kind of like asking, what is the weather in America today? Right? And
Yeah,
obviously it's going to be different in Los Angeles, Miami, Kansas City, whatever the case may be. It's going to be different no matter where you go.
right.
What are good markets today in terms of return on investment? What are the things that you're looking at in the US now?
Yeah, well, we like Alabama, Tennessee. We have a little bit in Arizona, believe it or not. Arizona is much more expensive, but we have a little bit of opportunities in Arizona and some other markets. But just generally the lower priced markets just make a lot more sense. And Ryan, you mentioned inflation. And this is one of the hidden wealth creators when it comes to income property. I always like to say income property is the most historically proven asset class in the entire world. And it also happens to be the most tax favored asset class in America. And one of the reasons it is such a reliable, proven asset class is because it's multi-dimensional. In most investments, they're one-dimensional. If you buy non-dividend paying stocks, cryptocurrencies, precious metals, the whole strategy is buy low, sell high.
Mhm.
That's it. That's the whole game. Dividend paying stocks, buy low, sell high, get some dividends in between. Income property has five or six very powerful dimensions. And you mentioned inflation, and that is definitely one of them. Now, I created a strategy 21 years ago, and then I trademarked it about, I don't know, 14 years ago or so. It's called inflation induced debt destruction. And I know that's a mouthful. It's absolutely an amazing hidden wealth creator. Most people think they're getting rich in real estate because they bought it for one price and now it's worth much more. And they can either refinance the property and pull cash out tax free, or they can sell it and make a nice big fat capital gain.
Mhm.
That's okay. But what happens behind the scenes if you use financing to buy your properties, and now they're talking about offering a 50-year mortgage. And the dumb people who are uninformed will do the simple thing and say, 50-year mortgage, I'm going to pay so much more interest on that 50-year mortgage. But what they're not realizing is during that time, there's going to be a whole bunch of inflation that is going to devalue the debt. I mean, it's an amazing opportunity that we can borrow money at today's value and pay it back at tomorrow's lower value. This is inflation-induced debt destruction. The dollar, I mean, almost everybody on the planet will agree that the dollar today is going to be much more valuable than the dollar in 5 years or 10 years, okay? Because inflation devalues the dollar. We've got $38 trillion in national debt. There's no mathematical way to pay that debt. It just simply will never be repaid. It will simply just be devalued by inflation-induced debt destruction. This is the business plan of virtually every government and every central bank around the world, including definitely the most powerful central bank, the US central bank, the Federal Reserve. So what we do is we borrow this money at today's value, pay it back at tomorrow's lower value, and that is a hidden wealth creator. And I can give a real world example of this that happened to millions and millions of people. It's not some esoteric theory. It happened to millions of people and made them very, very rich.
Please do.
Okay, great. So a good time to look at this, because it happened to literally tens of millions of people, actually, not millions, is go back to 1972. 1 year before that, Nixon closed the last tether to gold on August 15th of 1971. Nixon took us off the gold standard and broke this sort of contract with the world. And literally, you could say that Richard Nixon, our president at that time, with all his flaws, okay, and all his scandals, was incredibly smart. He was literally the best salesman on planet Earth because he sold this whole idea that the dollar would not be backed by gold anymore to the entire world, and they took the deal. It was an amazing sales job. It was incredible. The average price house just 1 year later in 1972 was just over $18,000. If you borrowed 80%, put down 20%, you would have borrowed just over $14,000 to buy this house. Okay, this $18,000 house. I know everybody's thinking, wow, I was alive in 1972, that's a miracle. The mortgage rate back then was higher than it is now. It was 7.37%. And your monthly payment on this house would have been $101 per month. Okay? For 30 years, that payment was fixed. And let's assume the tax rate, the tax bracket you're in is 33%, just for argument's sake. Let's say your taxes are 1/3. And let's look at a real world example here, okay? So in 1972, the inflation rate was 3.2%. A dollar was worth a dollar because the inflation hadn't occurred yet. We just borrowed the money. We just did the deal. We just bought the house.
Yeah.
And our payment was $101 a month. But fast forward 12 years to 1984, George Orwell's famous book, it's an easy year to remember, 1984. That dollar we borrowed in 1972 is now only worth 41 cents. Okay? So we're still writing checks every month for $101, but it feels much lighter because inflation has devalued that. The actual value of that check in nominal dollars is 101. That's fixed for 30 years. But the real value after inflation is only $41 per month.
Yeah.
So that house is really becoming much more affordable because of inflation-induced debt destruction. Now let's move George Orwell's book from the nonfiction to the fiction section, or to the nonfiction section, because it is nonfiction. He
It
predicted
feels that way.
everything that came true, sadly, with the surveillance state we live in and everything else. And I actually don't know why I'm laughing when I say that. It's terrible, but it was a warning. So now let's go to the end of that loan. Okay, the average inflation over the course of that 3 decades was 5.1%. In nominal dollars, remember we only borrowed just over 14,000, but we repaid over $36,000.
Yeah.
But after inflation, the value of those dollars was only just over 16,000. Still slightly more than we borrowed, but a lot less than we thought we repaid in nominal dollars.
Mhm.
After tax benefits, because that mortgage interest is deductible, we only repaid $12,655. But remember, we borrowed 14,000 and change. So we repaid less than we borrowed. Let's take a summary of this. We borrowed $14,614. We repaid $36,300 and change in nominal dollars. Our nominal interest rate was 7.37%. In real dollars, after inflation-induced debt destruction, we only repaid $16,393, making the real interest rate 1.06%. But after tax deductions of the mortgage interest, we only repaid $12,655, making our real rate negative. We got paid to borrow money. Our negative interest rate was 1.16% for 3 decades. And guess what? We got to live in the house and we got paid to live there. Okay,
Yeah, and it's
now,
gone
now
up in
just
value.
imagine for a moment that this is a rental property. It's not owner occupied. And every month the tenant is paying you rent that covers a little more than your mortgage payment, and over time, a lot more than your mortgage payment because you're raising the rents, yet your cost of ownership is fixed. This is like an infinite return. You can't do this with stocks, bonds, cryptocurrency, precious metals, or anything else. It only works with income property. And there's one other category, the Wall Street tycoons that do what's called leveraged buyouts,
Right.
LBOs. You've probably, all your listeners have probably heard of an LBO. Maybe they saw, some of the movies about, Carl Icahn, T. Boone Pickens, all the rest of the Wall Street tycoons. Because
Sure.
what they would do is they would do exactly what we do with rental properties. They would find a company, they would buy it, and they would just pile as much debt as possible onto that company so they could buy it with as little cash as possible. Or maybe they'd even use stock in another company to buy it. And then they would make the company repay the debt they just piled on it. Okay?
Mhm.
Making it essentially an almost free acquisition. And
Okay.
that's exactly what we're doing here. We're saying, okay, lender, I want you to pay for as much of this property as you'll finance. I'm going to pay as little as possible. And then I'm going to outsource the debt obligation to the tenant, just like the leveraged buyout operator does with the company. They make the company repay the debt. We make the property or the tenant repay the debt. So it's
Gotcha.
just an incredible deal. And that's inflation-induced debt destruction in a nutshell.
It's amazing. That's such an amazing concept, and I did see that about the 50-year mortgages that are being proposed now, and I had that exact same thought. I went, oh, because I've seen you present this as well, where it's like, oh, wait a second, this is basically free money. It's the ability to generate generational wealth if you do this the
Yeah.
right way.
Yeah.
Now, I know that time is tight. I know that you've got to go. For listeners, if they want more information, how can they find you?
So my main website is jasonhartman.com. You can find me on any podcast platform. Just type Jason Hartman. My main podcast is called The Creating Wealth Show. And of course, I'm on YouTube. Just look up Jason Hartman, Empowered Investor, and you'll find me there.
Amazing, amazing. I would love to have you back on the show to talk about more, including my
Yep.
conspiracy theory that the board game Monopoly has was what created the boom in rental properties in the 2000s. So we can talk about
Uh,
that some other time.
well, Monopoly was around a long time before that, though.
It was, you know what? It was actually developed by people who were communist leaning, believe it or not.
Oh, how interesting. I do not know the history of Monopoly, but I certainly used to play it when I was a kid all the time, and it's a great game.
Yeah,
Yeah,
it explains all your success in real estate today. So I love it.
good
I love it.
stuff, good stuff. Well,
Thank you so
yeah, I'd love
much.
to go into that, and let's do it again, Ryan.
Thank you so much for coming on the show, and I look forward to having you back again soon with more information on what's going on in the US real estate market. Again, listeners, reach out to Jason, find him on YouTube, find him on jasonhartman.com, get more information, and start investing today. Today's the best day, other than yesterday. Now's the time. For
Absolutely. Happy investing to you and your listeners.
absolutely. Thanks so much, Jason, and we'll see you soon.